Our next lesson is Goodwill. Now the specific objectives for this lesson is to explain the meaning of the term Goodwill, state factors that affect the value of Goodwill of the business, prepare the accounting entries for Goodwill on admission of a new partner, that's when the Goodwill account is maintained, and for when the Goodwill account is not maintained. Now if we have a look at the meaning of Goodwill, Goodwill is the advantage that the new partner will have for joining a new business as a going concern. Think of companies like Coca-Cola or McDonald's or Apple or Facebook. If a new partner wants to join, he will have a certain advantage because those businesses already have established reputations. So now in our example, Commas Enterprises has assets worth the value of 320,000 Namibian dollars. If Commas Enterprises were to sell its company for 400,000 Namibian dollars, then that 80,000 we won't call profit, but we will call Goodwill. Now the value of Goodwill can be determined as follows. It can be the location of the premises, can also be the reputation of the business, can be the commitment of the employees, the number of regular customers, and contacts with reliable suppliers. Now let's have a look at Daisy and Anna. Now Daisy and Anna, at the beginning, their profits were rather low because they didn't have a lot of customers, and also they had employees, but the employees were low on morale, so they weren't working that hard, and also they didn't have suppliers that were reliable. So Daisy and Anna started to work hard on their business. So they moved into town and they let all of their customers and potential customers know with lots of advertising. So the profits started to go up because now they had more customers coming to their shop, and also the morale of their employees changed. The employees started to get more motivated and work harder. Also, they are starting to get known for better quality products and better quality services. All those factors contributed to the increase of Daisy and Anna's profits. So now their friend Chris saw that the profit of the company is increasing and he wanted some of those profits. Anna and Daisy told Chris the reason why they have this profit is because they were willing to work hard in the business. And now Chris wanted a piece of that profit. But those high profits are due to regular customers and also the company being in a good location in town. So Daisy and Anna told Chris, if you want to share in the high profits, we'll give you 3 options. The first option is to pay us privately. So Chris will pay them privately, and therefore no entries will need to be recorded in the books. The second option is that we will create and maintain a Goodwill account, and if we do that, the effects will be as follows. On the debit side of the Goodwill account, we will divide the Goodwill amount in the new ratio, and on the credit side we will close off the account with balance carried down. And then the third option is that we do not maintain a Goodwill account. So in the Goodwill account on the debit side, we will divide the Goodwill amount in the old ratio, and on the credit side we will divide the Goodwill amount in the new ratio.